your altcoins suck. But there is actually a list of altcoins that you can be buying that don't suck, that Wall Street are about to be buying, and that can actually make you rich. So if you're sitting around waiting for this magical thing called an alt season, it ain't coming. I'm going to give you a list of altcoins that Wall Street is actually going to start buying. And that's probably going to be the only place that we're ever going to get an alt season. The other thing that I want to talk about today is I want to talk about Bitcoin and why I think it's inevitable that Bitcoin is about to get an all-time high. I'm fully convinced that Bitcoin is about to get an all-time high, and I'm going to show you exactly why I think Bitcoin's about to get the all-time high. So really, today is going to be a massive, massive, massive show. Really, so much to talk about today. Let's go, guys. Got a big show today. We're going to talk about the list of coins that Wall Street's actually going to be buying, and then we're also going to be talking about why it's inevitable that Bitcoin's actually about to hit an all-time high. I mean, when I saw this morning, I was like, I know the price is going higher. I know the Bitcoin price is going higher. Obviously, I've been tracking it since the war was finished, and we kind of said, look. We're going to get this V-shaped recovery. Now we're getting this V-shaped recovery, and I think this is the V-shaped recovery that takes us to an all-time high. Obviously, I don't think it's going to be like one green candle. I think we're going to just slowly go up here and get to the all-time high. And I think the all-time high, I'm actually going to give you the exact number of days where Bitcoin, when we are actually going to hit the all-time high. Or specifically, I'm going to give you like the latest number of days. Which is going to take us to the all-time high. So listen, if that sounds good to you after a bit of a rocky start with YouTube chat tabs playing in the background, help me out here. Help me get distribution. All you need to do, literally obliterate the like button, maybe pop a comment in the chat. That really, really, really helps us get distribution. I'm going to give you guys tons and tons and tons and tons of alpha. All right, so let's get into it. So let's talk about why the all-time high is actually inevitable. And why these altcoins, or your altcoins specifically, aren't performing. Actually, while I'm here, I see Aptos is actually up. Remember yesterday when we looked at Aptos, it was at like 420 when we were looking on the show, and then the Wyoming announcement came through and whatever else, and then Aptos started actually going up. All right, so now also, as far as I think for now the ceasefire is in effect. The war line is basically telling us that this war is kind of over. So I think that's like historical news. That's given the markets a little bit of free rein to actually run forward. But I don't think that that's the reason why the markets are actually are firing. I'll show you why I think the markets are actually firing. So yesterday we had Jerome Powell testifying in front of Congress. I don't know if you guys were watching that. I was watching parts of it. And in the testimony, when Jerome Powell testified in front of Congress, we saw him mention that if it wasn't for Trump's tariffs, then probably he would have reduced interest rates already. Or at least he thinks that if there's no effects from the tariff price increases, and therefore no inflation, then he's going to start reducing interest rates. So here's the testimony of, I want to play it for you guys.
If you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that, but we're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did,
what he's saying is, he's saying, listen, if Trump hadn't threatened tariffs and we weren't worried about price increases from tariffs, we actually would have carried on cutting interest rates, which actually could have come in response to what JD Vance was saying. He was saying, look, I'd love to hear an argument for why Powell cut rates 50 basis points right before an election, but can't do it after the election where inflation is much lower. Now, Powell gave him his answer. The answer is we can't cut if we think that prices are going up because of tariffs. So what has that actually done to the markets? The first thing that has done to the markets, as you can see, the dollar started breaking down. Okay, so the dollar is breaking down. And a weaker dollar means better scenario for risk assets. The second thing is it's now brought back the prospects of 3 rate cuts this year. Remember, before Powell testified yesterday, they were talking about 2 rate cuts this year. Now we're talking about a rate cut in July, a rate cut in September, and a rate cut again in December. We're now back to 3 rate cuts this year. Now remember, Trump's targeting at this rate. Trump's targeting 8 rate cuts. He wants 1%. So he wants 4 rate cuts. We're now looking at 3 rate cuts potentially between now and the end of the year after the testimony, and that is providing that the tariff noise doesn't come back, because Powell's worried that inflation is going to go up because of the price increases because of the tariffs. So what actually happened? What's the 5D chess move that's actually happening here? We know 2 things. We know Trump wants lower interest rates. That's what we know. We know Trump wants lower interest rates. That's right now his biggest objective. The reason why it's his biggest objective is because that's going to stimulate the economy, and that's going to take markets to all-time highs. We also know that when Trump announced tariffs, he rocked the markets, right? So he mentioned them in February here, and that basically took the S&P down and Bitcoin down and every other market down. So we know that the enemy here is actually tariffs. And if you read between the lines, what is Powell actually telling Trump here? He's saying to Trump, listen, if you don't talk about tariffs again, and there's no risk of prices increasing, I'm ready to cut rates. So now that is what Trump's dealing with. So what did Powell actually do by doing this? Powell removed a risk in the markets. Because remember, the markets are sitting on edge going, hold on a second. In 90 days from the 9th of April, which is the 9th of July, which is in 2 weeks, on the 9th of July, there could be that Trump starts talking about tariffs again. And if he does, that could actually crash the markets, right? But Powell's actually warned him and said to him, listen, if we don't feel price increases as a result of tariffs, then we are going to continue to cut rates. And if we can keep this level of price stability, we could actually cut rates 3 times before the end of the year, which is 0.75% rate cuts between now and the end of the year. Trump is looking for between 1% and 2%. So what you're saying here is you could actually get your rate cuts, just don't increase our pricing, or don't increase inflation by increasing tariffs. And if you do that, then you'll get the rate cuts that you actually want. And so yesterday, when the markets actually heard this testimony, the stock markets went absolutely ballistic. I don't know if you guys were watching stock markets, but I mean that's the green candles. Look at those green candles yesterday, which actually, that green candle actually sent the Nasdaq to all-time highs. So you can see now the Nasdaq is actually at all-time highs and going into price discovery. So you can see Nasdaq now going into price discovery. S&P, when I looked earlier, was just under all-time highs. So that's the S&P all-time highs. It's just under all-time highs. I mean, I can't even measure it. That's how small it is. 6.1 all-time high is 6.145, and it's now at 6.107. So both the S&P and the Nasdaq are now at all-time highs. Bitcoin is not yet at an all-time high, because if you remember, the all-time high is $112,000. We're at $107,000, but we are climbing beautifully. We are climbing very beautifully. And I'm going to show you after I pour my tea, because my lovely chief of staff made me an amazing tea again. Oh man, I just can't reach the honey. Hold on a second. Is this tea good without honey? This tea is not actually tea. It's a concoction. I'll show it to you. See, that's the concoction over there. You can maybe get your chief of staff if you have a chief of staff. So it's mint leaves, it's ginger, it's cinnamon, and then it's always good to mix that with a little bit of honey. Very, very good to mix that with a little bit of honey. Anyway, let's go back to the market. So what happened with the markets is, when this happened, the markets hit all-time highs yesterday. But the all-time highs actually aren't the whole story, right? The all-time highs are just part of the story. The other part of the story is actually this chart over here. So you take the S&P and you take the Nasdaq and you say, all right, cool, no problem. Let me put on the moving 50, the SMA 50 and the SMA 200, the moving averages, the simple moving averages. And what you'll notice is that on the Nasdaq, we've actually just had a golden cross. Now, the one thing we know about a Nasdaq golden cross is it doesn't really happen often. But when it does happen, it does take the Nasdaq way past the all-time high. So you can see it over here. Look at this. The last time the Nasdaq had a golden cross, it went up 87%. Look at this over here. Look at this over here. So we had the golden cross over here. So here's the last time that we had it on the 15th of March 2023. It doesn't happen as often as it happens on crypto charts or whatever else. But that golden cross took us all the way to 87% on the Nasdaq. And if you go like a little bit further back and you say, let's look at the last time that there was a golden cross. There was a golden cross here. That took the markets up 97% on the Nasdaq. So what you can see is that the golden cross on the Nasdaq is actually quite a significant move. Same thing when you look at the golden cross on the SPX or the S&P 500, right? Every time it did it, the S&P 500 went up a lot, and every time that it happened, we actually went into all-time highs. So you've got the golden cross happened already on the Nasdaq, and then happening soon on the S&P 500. And again, I just want to show you just how big these golden crosses are. So up 87%, 80%, 31%, 74%, 5%, 3%, 72%, 26%. The golden cross on the stock markets is a very, very, very significant indicator. And it does feel like if you look at the RSIs, and you look specifically at the RSIs on the S&P 500, RSIs usually oscillate between overbought and oversold. So oversold is below this line over here. Overbought is between this line, usually in this line over here. There's still a way to go here, and before we get into the overbought territory over here. So all signs point to the stock markets actually moving up, right? And so that is the reason why I think that it's almost inevitable that Bitcoin's going to hit an all-time high. You've got the M2 money supply chart. I'm not going to pull that chart up again. I think we've seen it all a million times. When lawyers, I've got a friend who's a lawyer, right? When they've heard something too many times, they say ad nauseum. Like you've heard it ad nauseum, like you feel nauseous from hearing it again. I think that's what it means, right? So it's the same thing. Like we've looked at that M2 money supply chart ad nauseum. That's how we've looked at it. So anyway, today I took the chart of the S&P 500 and I said, okay, what if we take the chart of the S&P 500 and we say, let's take the chart of the S&P 500, let's take the chart of Bitcoin, let's overlay the two charts, and let's quickly just work out what happens every time the S&P 500 hits an all-time high. What actually happens to Bitcoin? So it's quite interesting that usually with a delay of about 41 days, Bitcoin actually lags. So 41 days after the S&P 500 hits an all-time high, Bitcoin actually hits an all-time high, which means that literally within 30 to 40 days, we could actually get a new Bitcoin all-time high. Because if you think about what how this news cycle basically works, is the crypto has become to stock markets what altcoins are to Bitcoin, right? So remember now, the main institutional asset or the main crypto asset for investors is now Bitcoin, right? And so that is the entry to the asset class. Now, when do they move into the asset class? It's just like when we move from Bitcoin to altcoins. Stock market investors also move up the risk curve. When they've made a lot of money, when stock markets are at an all-time high and there's lots of liquidity, and people have got a lot of money and lots of money goes into circulation, and people make money and they feel rich, they take more chances. Where do they take more chances? Oh, well, I've got my money from Bitcoin, from the stock market. Let me take that money from stock market and let me invest it in a slightly riskier asset, which is actually, in this case, Bitcoin, right? Or Bitcoin or a whole lot of other assets. So that is what I think is going to happen now. I think that now the stock market's at all-time high. It's going to give a license for more stock market investors to take risks. When they take those risks, they're going to go up the risk curve or down the risk curve into more risky territory. And the more risky territory, they're going to find themselves buying crypto, and that's going to push the crypto markets up. Okay, so that's pretty much like the Bitcoin thesis and why I think the Bitcoin market is going to go up. But I think we need to talk about the altcoins because, look, being an altcoin investor in this cycle hasn't been very rewarding. I'll be honest. Like it's actually just better to hold Bitcoin in this cycle. And there's a good reason for that. And unfortunately, I don't think it's going to change. I don't think that it's going to be better to hold altcoins, or at least I don't think it's going to be better to hold all altcoins. But I think there is a specific class of altcoins that if you do land up holding that specific class of altcoins, then I think you'll land up outperforming Bitcoin. So the big question is, which are the altcoins that you should be holding to actually outperform Bitcoin, right? What are the altcoins that are going to be the Solanas of the season? And by the way, I do think that investing in altcoins is going to become a little bit more fun than it is now. I mean, it's not only like what I think, it's also like we did have the golden cross on total 2. And we do know that when we do get golden crosses on total 2, that usually does push the market up. But I think we need to understand the money flows. And if you understand the money flows and you understand which tokens are actually going to land up getting the money, then you can outperform, then you may be able to actually outperform Bitcoin. But the idea is that you have to invest now, because you have to invest when there's no interest in the altcoins, thinking that all of a sudden the money is going to come into the altcoins, right? So you can't invest when the money's already flowed into the altcoins. You got to say, okay, what are the altcoins that are going to run? Why are they going to run? Where is the money going to come to actually lift up the bags? And the reason why I say, where is the money going to come to actually lift up the bags, is because the market dynamic has completely changed. What is the new market? The old market dynamic. Old market dynamic, it was me and you and Josh and 𝗏𝗏𝗏, and we were all buying Bitcoin. And then we were moving all our profits from Bitcoin into altcoins, and we were pushing up all the altcoins. Problem is, now there's 50 million tokens out there, right? And because there's 50 million tokens out there, that's the chart of the number of tokens out there. It's impossible that the retail money is going to be able to drive up the altcoins, right? It's impossible that the retail money is going to drive up the altcoins. So we've got to start thinking to ourselves, okay, well then, if the retail money can't drive up the altcoins, then what sectors can we actually end up making money in, right? So think about it like this: if there's 1 million altcoins and there's only 2 million investors, there's no way that we can get enough momentum to push up all the altcoins. So I think the market is very, very, very segmented. The market is segmented because crypto has become a much more institutional grade asset, and because there's so many more crypto projects. And so I think the days of alt season, where every single altcoin goes up and lands up outperforming Bitcoin, is probably not going to happen. I think that the market is going to become much more segmented. It's going to be Bitcoin, a couple of other coins, a whole lot of really, really, really bad coins, and then there's going to be the trenches. And I think that where retail is going to get their alt season is going to be deep in the trenches, right? In the meme coins, in the AI agents, in whatever trench coins they're going to be. But I think that the art now is to start understanding how you can make money in the other two places. Because, I mean, you can make money in Bitcoin, but Bitcoin's already at 100,000. And it's very hard to make money in the trenches, although there is a lot of money to actually be made in the trenches. It's very, very, very hard to make money in the trenches. So the idea for us is to try and work out how we can make money in that middle sector of the market. And that middle sector of the market says, where is there going to be enough money coming into the project to actually be able to push the price up? What are those projects actually going to be? And that's really what I want to talk about today. Because what we know about the market is that this market dynamic is different. And I think the chart that shows us best that the market dynamic is different is this chart over here. This is the chart of the total open interest in the market. Now, I remember like a year ago or a year and a half ago, when we used to look at this chart of the total open interest in the market, the Binance total open interest in the market used to be higher than the CME total open interest in the market. What that means is that the retail investor and the crypto investor was much more powerful in this market, or in this market dynamic, than the institutional investor was. So I've taken a screenshot from a while back, and you can see that the difference, this is already quite late. This is the day that the CME went above the Binance for open interest. And today you can see that CME is way above Binance in open interest. In fact, it's almost double Binance's open interest. That just shows you that this market cycle is actually very different, and that there's a new buyer in this cycle. And it's not us, it's not the retail investor. And that our retail investment and the crypto native investor really can't push this market up with our buying power. Not when we compete against the ETFs, not when we compete against all the treasury companies. Not when we compete against people like Marathon, 21, Riot Platforms, Tesla, Metaplanet. We can't compete. And so the force right now, I mean, you can see everybody starting to announce. Treasury's Anthony Pompliano announced his first Bitcoin, or they raised $1 billion. We can't compete with all of that. And so in this market dynamic, we need to understand how to beat this market dynamic. So where is this market dynamic going? The first place that the market dynamic is going is Bitcoin, right? Right now, they are very much at Bitcoin. Actually, funny enough, they're actually also very much at ETH. I know it doesn't seem like it, and I'll show you in a second why it doesn't feel like they're very much at ETH. But actually, when you compare ETH and you say, what percentage of ETH is currently locked up in ETFs? 3.37% of ETH is locked up in ETF versus 6.3% of Bitcoin locked up in ETFs. Bear in mind, the ETH ETF came a lot later, right? And so if you look at it like this, actually, the ETH chart is actually doing very, very, very well relative to how long ago the ETF was locked. Remember, like the Bitcoin chart has had a long time to climb. So we can actually look at it here. So there's the total ETH is okay. What I wanted was actually market cap. Researchers, if we can just do market cap. Okay, we've actually got that here. So you can see that the total cumulative is 10 billion divided by market cap. So 3.37% of all ETH and increasing. You can see the trajectory is very much increasing. So right now, you've got Wall Street with massive, massive, massive crypto appetite. But where are they channeling that massive crypto appetite to? They're channeling it to Bitcoin. They're channeling it to ETH. And actually, they're channeling it somewhere else. And that is crypto-related IPO stocks. And ironically, this has actually been our biggest enemy, right? So there is massive, massive, massive institutional demand for crypto. The only thing is, where are they actually going to access this, or what are they using as an outlet for this demand, right? And in the old days, you could only, for example, in the old days when we managed to get retail to come and invest in crypto, we had to get them from TradFi to come into crypto to get exposure to crypto, right? Now they don't need to do that. Now, actually, both institutional investors and retail investors are having the time of their lives trading crypto stocks, but on the stock market, right? So crypto stocks. So for example, like I just want to show you, this is Robinhood since the Trump tariffs. If you would have bought Robinhood, you would have got yourself 178% return. I actually did buy it. I remember I bought it at $38 and I told you guys to buy it that day too, right? So where retail and institutions are going is they're going to the crypto stocks and they're saying, look, we don't actually need exposure to crypto itself. We can just go and buy Robinhood, or we can buy Coinbase. And if you did buy Coinbase at the bottom of the tariff mess, you would have made yourself 146%. That's much more fun than, for example, buying ETH, right? Like if you go to ETH, and even ETH was like the hardest hit, the worst hit, and the best recovery. And even that's not even up as much as the crypto stocks are up, right? So ETH is up 69%. Bitcoin, here we go. Bitcoin is up. Here it is. Since the April, that's June. The April tariffs is here. So since is up 41%. So what we can see is that actually, for people who want to get exposure to crypto, the better or more fun place to get exposure to crypto has actually been just to go and play the crypto-based stocks. I mean, we saw Circle. Thank God Circle's starting to come down a little bit to a little bit more of reality, right? But what we are seeing is that the frenzy, the hype, the media headlines, the news headlines are all in the crypto-related stocks. Coinbase is actually leads S&P 500 gainers. Can you believe that? So that was yesterday. Robinhood is sourced to 15 new weeks high. These are all crypto-related stocks. Circle, we all saw all the headlines around Circle. So now actually the game, or the way to get the best crypto exposure is actually to get in the crypto stocks. We're not the only ones who know that. The institutions, Cathie Wood, ARK Invest, who used to go and buy a whole lot of Bitcoin, well, she's going to buy Coinbase. She's buying Circle. She's buying a whole lot of other things. BlackRock who can buy a lot of crypto also land up going to buy all the crypto-related stocks. So now we're in a position where where we're sharing liquidity. Before, if we wanted to get investors into crypto, they had to come onto crypto and they needed to invest in our crypto and actually land up buying our crypto for the prices to go up. Now retail investors want to invest in crypto. What do? Well, they go and buy stocks that give them exposure to crypto. And the truth is, they make a whole lot of money, much more money than we can offer them, much more money than crypto can offer them. They make that on the crypto-related stocks. Now, look, guys, the good news is that the two worlds are actually merging. And I want to just show you this because I think it's super important. The two worlds are actually merging. And I think we are in a perfect position to take advantage of it. And we're going to take advantage of it because what we're going to start doing is we're going to start trading the crypto stocks. Go open a Bybit account. On Bybit, they do have crypto stocks. I can't show it to you on the screen because it's only on mobile. And if I show my mobile, you won't be able to see it properly. But you can go and get crypto-related stocks. You can trade Circle, you can trade Coinbase, you can trade Robinhood on Bybit using crypto money. So you can do that. If you sign up, by the way, with this link over here, you get 50% discount on your stock trading fees. We're going to start building a portfolio of crypto stocks. So when we build a portfolio, it's going to be MicroStrategy, it's going to be Coinbase, and it's going to be Bitcoin. And the reality is that when we do that, we're going to land up making a lot more money because right now, that is where the appetite is. Well, it's not really appetite. That is where the money is. Remember, you want to make money, you got to follow the money. Where is the money right now? The money is in Wall Street. Retail investors, so there's two types of investors. Institutional investors, their money is in Wall Street, always has been in Wall Street. Their entry point into crypto is ETFs and crypto-related companies. Retail investors that used to come to trade our altcoins and our shitcoins are saying, I don't need to trade your altcoins and your shitcoins. I don't need to unramp money via this very complicated thing that you got. I'm just going to go and trade crypto-related stocks. And I'm going to end up making much more money trading these crypto-related stocks, right? So that is the first place where money is going. Where money is not going is money is not going into these tokens. And that's why, yes, okay, we've got a green day today and syrup's up 26% and AppTop's up 10%. But take it on a 1 month. In the last month, if you held Render, you're still down 33%. If you held Athena, you're still down 30%. If you held Celestia, you're still 30%. And these altcoins are just trading like this and trading like this and trading like this. So what's the trick here? The trick is to anticipate the money flows and to understand where the money is going to flow and why the money is going to flow the way it's going to flow. And once you know where the money is going to flow, then you can take your bets now. When you see now when the prices are actually low, you can take your bets now, place your money here, and then become an investor. Sit back and chill and wait for your thesis to actually play out. Now I'm going to show you my thesis. I'm going to show you where I think money is going to flow. Now, before I show you my thesis, I just want to just remind ourselves, what is the objective of this thesis? The objective of this thesis is to outperform Bitcoin, right? So the idea is, obviously you want to make money, but if you can make the same amount of money investing in Bitcoin, then just invest in Bitcoin. The idea behind this thesis is actually to outperform Bitcoin. So how do we outperform Bitcoin? Well, the way to outperform Bitcoin is to pick altcoins that are going to perform better than Bitcoin, right? Now, in this case, what you can see is that in the last 90 days, 14 tokens have, in the last 90 days, 1, 2, 3, 4, 5, 6, 7 tokens have outperformed Bitcoin in the last 90 days. So if you wanted to make money, you would have had to be invested into Hype. What is WBT? BCH, say? Huh? Whitebit Exchange. Monero, Aave, a thing. That is what you would have had to invest in the top 50 if you wanted to outperform Bitcoin. Our job here is to outperform Bitcoin. Because if not, then just put your money into Bitcoin. No stress, no watching YouTube channels, no checking TradingView, no checking bubbles all day, no in the middle of dinner having to do this. I don't know about you guys. I often do this in the middle of dinner. Or even worse, I said to them, guys, I'm just going to the bathroom. My friends must think I have such a bladder problem. And like as I get older, they must think it's getting worse and worse. Like they must think like, because at dinner, because I've got ADD, I've got terrible ADD, as you know. So I've got ADD and like my dopamine starts moving and I need to see the pricing. So like often at times I just go for a walk It's quite rude. Like I leave like people sitting and talking, and I just go for a walk. And what I do when I walk is I look at the prices, right? Also, like when I wake up in the middle of the night, I swear to God, when I go to the bathroom in the middle of the night, I'm not going to look at the price. I'm not going to look at the price. I'm not going to look at the price. Or I'll just look quickly. I know you guys also do that. So stop laughing, because I know that you guys also do that. So now let's talk about how do we beat the Bitcoin returns? Because if not, then we should put our money into Bitcoin and follow Ben Cowan, and it does that. And I think the way to beat the Bitcoin returns is to understand where the institutional money is going to come from and where is it going to go. So the money is coming from institutional investors. Where is this money actually going to go? And if we can just preempt that cycle, we can just end up making money. We know retail money isn't going to push this market up unless you're in the trenches. So we need to anticipate where the Wall Street money is going to go. Guys, for those of you who were here in 2021 and in 2017, and for those of you who enjoyed the cycle, I was there too. I loved that cycle. We're not going to get that kind of alt season ever again. So we can sit here and we can talk about the good old days. You know, like your parents always say, in the good old days, Let's talk about the good old days. Meet me at the pub. We can have a beer. We can talk about the good old days. But we should now forget about those old days, and we should start looking forward into what this new alt season is going to be. And I think the main thing we have to remember is that when things become institutional, they become kind of boring. Bitcoin became institutional. Bitcoin's kind of boring. ETH became institutional. ETH is kind of boring, right? It is what it is. We need to anticipate where the flow of money is going to come and where it's going to go. And I think that I've narrowed it down to 4 places where the flow of money is going to go from the institutions. And that's, unfortunately, the only money that's going to push up crypto unless you're trading in the trenches. So let's look at the 4 sectors individually. The first sector is a pretty easy sector. And that is, guys, there are a whole lot of ETFs that are coming, right? No brainer. There's a whole lot of ETFs coming. There's the deadlines for every single one of those ETFs. There's a Solana ETF, which is probably going to be approved in the next month. There is a Litecoin ETF, which is probably going to get approved pretty soon. There are a whole lot of ETFs. Become familiar with the tokens that are going to get ETFs. You see, unlike Bitcoin and ETH this time round, when the ETFs of Bitcoin and ETH were approved, there were massive grayscale trust overhangs, which then had to be sold into the market, right? For the other coins, there's no massive grayscale trust overhangs, which means that the ETFs, when they approved, is 100% new demand. Right, simple. 100% new demand. So the ETFs, 100% new demand. Okay, well then, just put money into the tokens when there's an ETF that's imminent. Become familiar with when the ETFs are coming out and put money into it, and then chill and wait for the ETF to get approved. And then when the ETF gets approved, just take your money. So that's option number 1. That's where the first set of institutional flows are going to go to. Second set of institutional flows, where are they going to go to? Very, very, very similar, right? They're going to go to crypto IPO stocks, right? So you go to hiive.com securities, and you look for crypto IPO stocks, and you buy them before they get onto the market. So yesterday you could have bought, in Jan, you could have bought Kraken at 21. Now Kraken is at 30. Why? Because it's getting closer and closer and closer to IPO. The second bucket of money is going to go to crypto IPO stocks. Simple. So bucket number 1, tokens that are going to get ETFs. Here's your list. It's Litecoin, Solana, XRP, Dogecoin, Cardano, Polkadot, HBAR, Avalanche, Sui, and Tron. Don't know yet. These guys are much later. They applied much later. By the way, there's also a Say. Canary filed for a Say one yesterday. The ones that are coming up very soon, XRP, Solana, Litecoin, those are coming up probably in the next month. Just buy some, because when the ETFs come in, that's net new buying. Next one is buying. Get yourself out of this I can't mentality. I can only trade in crypto. No, you can't. You can trade in crypto. You can trade in stocks. You can trade in pre-IPO stocks. You are a slag. You do anything it takes to make money. If it means trading stocks, you trade stocks. If it means trading pre-IPOs, you trade pre-IPOs. You, from this day on, you are a slag. Okay? Repeat after me. Josh, repeat after me. Say, I am a slag.
I am a slag.
I do anything for money.
Do any-
If it means that I have to trade stocks, I will trade stocks for money. Say that.
If it means
Say it.
I'll trade stocks for money.
You'll trade stocks for money. Josh, will you go down on your knees into the trenches to make money? You see, Josh is a slag. We're all slags. Okay, we are all slags. We go wherever the money is because that's what we do, right? So I'm a slag, you're a slag. You all, come on, guys, just admit it. Just let's stop with this politically correct bullshit. Okay, like just say in the chat, I'm a slag. Just say it. I am a slag. If you're a slag, just say you're a slag. If you're a dirty slag, say you're a dirty slag. If you have fantasies of making money in the trenches, go down and make money in the trenches. Yeah, there we go. Okay, so hooker, slag, just say what you are. Just say I'm dirty. I'll make money. Slag here. There's lots of slags are in the chat here. Just call it what it is, guys. Come on. So we make money on ETFs. We make money on pre-IPO stocks. We make money also, where else Wall Street is going to go? Wall Street is going to go to projects that they understand, right? So what else is Wall Street going to buy? They're going to buy projects that they can understand. Let's understand what Wall Street can understand. Do you think that Wall Street understands the next 𝗙𝗀𝗃𝗪 technology with staking and liquid restaking, LST? Do you think Wall Street understand that? No, they don't understand it and they don't give a shit. You know what Wall Street do understand? Fees. We charge a fee. When we charge a fee, we make money. Then what do we do with the money? We pay it as a dividend. No, you can't pay it as a dividend. That's a security. Okay, so we buy back our token. You got it? Now, those are good slags. I've got a good bunch of slags here today. So again, Wall Street are not going to invest in the next 𝗙𝗀𝗃𝗪𝗃 with staking, multi-chain, cross-chain. They don't understand that. You know what Wall Street understand? Wall Street understand fees. That's it. They understand fees. That's why they love Hyperliquid. Why do they love Hyperliquid? Because they understand it. It's an exchange. It charges fees. There's a buy side, there's a sell side. There's a market maker, there's a market taker. Fees. They understand fees. You know why every time the market runs, the DeFi protocols run, Aave and all those. You know why? I'll tell you why. Because Wall Street understand them. We lend money, we earn interest, we take the interest, we buy back our token. You see? You get it? It's so simple. So what are they going to buy? They're going to buy the things that they understand because TradFi has similar things. TradFi has exchanges, crypto has exchanges, buy exchanges. Lending and borrowing. Stablecoins is actually treasury investments. They understand that. That is what Wall Street's going to buy. They're not going to go and buy your fancy technology. The fancy technology is going to take a long time to mature. So, long story short, we are looking for fee-generating protocols that understand. So, here's just put the cash card dashboard underneath in the bottom so everyone can just take this dashboard and then do it. You know what else Wall Street are going to start understanding? They don't understand it yet. Staking. Go to a Wall Street guy and try and explain to him staking. So you take your tokens, which are your shares, and then you stake them into a protocol. And then you earn money for staking. Huh? Can you imagine trying to explain to a Wall Street guy what staking is? They're never going to understand it. Okay? You know when they will understand it? When they start, because Wall Street understand yield. She said, then look, you want yield on your Solana, stake it. Oh, who's this bank that you stake it at? It's called Jito. That is what Wall Street are going to invest in. So remember, you got to dumb yourself down now, because I know we're way smarter than Wall Street investors, right? So now we need to dumb ourselves down. We can't be as smart as we normally were. We have to just say, look, like sometimes when you make content, you always think what are the stupid people going to think, right? Same thing here with Wall Street. You say, when you buy a token, you say, what will the stupid people actually buy it? Will the stupid slags actually buy it? Okay, then that's the one that you want to be buying. Why? Because it's so simple to understand. No technicalities, nothing like that. Lending and borrowing, trading, fee-generating protocols. Wall Street love that shit. And you know what they're going to do? This leads me into our fourth category. they're going to set up these vehicles like MicroStrategies to actually buy these tokens. You know why? Because if there's one thing that Wall Street love is that if they understand it, they think that, so it's like, just think of us being the smartest people, then Wall Street's like dumber, and then like Wall Street's customers even dumber, okay? They're like, we'll set up this trust that actually lands up buying this one token called Hyperliquid. So that's another bucket for us. We go and find the ones where people are setting up these vehicles to actually set up these things. Like SQD, they set up a vehicle to buy SQD. Now, you didn't hear it from me, but they're going to start buying like not $100 million, like $10 million worth of SQD. It was announced last week. You know, you heard it here first. Let's just quickly look at the price of SQD so you can't tell me I didn't tell you. Okay, it's down today, 13.12 cents. Okay, wait 3-4 days and then watch what's going to happen to this price. It's going to start going up. Why? Because you know why. You know exactly why. Okay, so you understand how this works. There's not going to be a normal alt season. Those days are gone. We have to beat Bitcoin. The way to beat Bitcoin is to try and anticipate where the institutional money is going to flow. Institutional money is going to flow to things that they understand. They understand Bitcoin. They understand ETH. As a result of the fact that they understand Bitcoin and ETH, they now understand Solana. They understand Hyperliquid because it's a trading protocol. And that's why they can land up buying all these Hyperliquid, all these like treasuries, right? Because it's easy to say, hey guys, we're buying tokens in this exchange called Hyperliquid, which charges fees and makes fees on its users. So simple. You get it? Okay, so that's basically what the thesis is. The thesis is you want to beat the cycle, forget about all the altcoins, forget about complicated altcoins, and just follow the money. The money is coming from Wall Street. Buy things that Wall Street understand. The easier it is for Wall Street to understand, the more money you're going to make. Simple as that. Is that clear, you bunch of slags? Rest in peace, altcoin run. Yes, but it's just a different run. Also, don't be shy to make money on crypto-related stocks. There's the Bybit sign-up link over there. 50% off all your 50% off all your trades. Be a good slag and do this so that you can trade stocks. I wish it was on desktop so I could show it you. I'm going to start making more money on the crypto stocks. Guys, there's more money to be made in Robinhood than there is to be made on any one of your altcoin bags. Honestly, look, yeah. There's another stock that I want to buy today. Yeah, I'll show it to you. It's called HIMS. HIMS is like a generic medicine company. Hims and Hers. Okay, I want to buy this stock. You know why? Bad news announcement. Went from they're getting sued by Novo Nordisk. Okay, cool. They've gone from 64 to 44. You know what happens when stocks drop like this? I buy. I actually bought UnitedHealthcare at like 290 something. Where is it today? 290. 301. Okay, so I haven't really made money. It's consolidating here. But we can have as much fun trading stocks now. So we can trade crypto stocks and stocks because we're going to use Bybit and crypto stocks and stocks. And tomorrow I'm going to show you some bot trading where you can make bots. Guys, we are slags. We make money wherever there is to make money. We can make money on bots. We can make money on pre-IPO stocks. We can make money on after IPO stocks. We can make money shorting stock. We can make money on everywhere because we are a bunch of slags. See you guys again tomorrow. You bunch of slags.